All right, everyone, welcome to the most important day of the year for all markets in general. We're going to be looking at the dollar, the S&P, and most importantly, Bitcoin as well today as we get into FOMC volatility. Let me go ahead and turn on the music on my side real quick. Not muted. All right, that should be good there. Let me know how audio is and all of that in the chat below. Let's go ahead and check this stream, make sure everything looks good. You can see right now I have trading light over here on the left, as well as over here you see open interest and CVD along with net long and net short positions on CoinAnk, and above that you do see the S&P right here and the dollar up here. So we want to be watching the dollar and S&P today because they are expected to be quite volatile, and Bitcoin will of course follow those. We do see the S&P, look at this 5-minute candle launching into price discovery. If we go to like our hourly time frame here, you can see full on blow off top being formed here on the S&P. We had been looking at, let's see here. So we had been looking at our lines of attack on the S&P, right? So if we draw trend lines on this, I was saying from this swing low to this swing high was going to be our trend for this parabola. And I do think we're starting to see that play out with this FOMC volatility. It is shaping up to give us that kind of like 60-degree uptrend on the S&P, which would finish off this blow off top before the Great Depression, because you look at a monthly time on the S&P, weekly time, monthly time. Let me get rid of all of these periodic volume levels so it's easier to see. Yeah, we are on track to make a complete blow off top for the entire United States stock market. This is a futures exchange right here at Black Bull, so that's why it doesn't show very much price history. This only goes back to 2014. So let me actually we'll look at this real quick just because I brought it up. Yeah, full on blow off top for the entire United States economy. We're entering the roaring 20s. We're in the roaring 20s, about to enter the Great Depression. So yeah, but before Great Depression, you always have blow off tops, most speculation, most euphoria at the peak. Before everything does start come crashing down. So I wouldn't be surprised if we do have the .com bubble for crypto. Maybe we see meme coins go to trillions of dollars in market cap before this Great Depression. That was satirical, by the way. We're not going to see a trillion on Pepe. Let me switch this back to Black Bull. Give it like a 5-minute candle chart. So yeah, we shouldn't really see too much volatility until the meeting actually starts, right? That's usually when stuff just goes bananas. And that will be at 2:30 EST. So that's in about an hour from now, and we'll have that live on the stream as well. Real quickly, I do want to answer whatever is in the comment section right now, because I do see the stream chat. I see a lot of people are commenting in there. Real quickly, levels to be watching out for on Bitcoin. We have a ton of single prints, big imbalance in this range when we shot up here on, these shorter term time frame candles. When you have a 5-minute candle that launches you up, 1% on the S&P, which, I mean, that doesn't sound like a lot because we're used to crypto, but 1% on the S&P in a 5-minute candle is insane. We also have Bitcoin, which launched up about 2.5%. So yeah, I do expect this to probably get retraced. We'll probably find support in these imbalances. Sometime, during the stream, we'll probably see a flush down, then a flush up, then a flush down. We'll just see a lot of volatility in this range today. Should be real exciting to watch. As far as trading goes, I've been warning you guys, today is not the day to trade. If you wanted to trade, we had a very clean failed auction down here at this level. 115 Bitcoin being shorted, no buyers. Price was not able to accept that level, creating a failed auction. That would have been your, setup to essentially, or your signal to go ahead and pull your fib, swing low, swing high. You would have entered on this golden pocket to 786. If you've been watching my channel for a while, you know this is what I do. So that's your entry right there, and you would have gotten a very nice position. Very, very tight stop. Risk to reward on this would have been amazing. We go ahead, kind of pull this for you here. I mean, your take profit for this position would probably be up into these imbalances up here, at least 50% take profit, and then you could let the rest ride. So yeah, I mean, this is kind of the trade setup that you could be thinking about, for next time if you missed this. failed auctions at sweep levels. This was our sweep level, this like dotted yellow line. And I actually kind of like that we didn't sweep this lower level. If you watched my last video, you know I said that was a potential, right? We could potentially have rolled down and actually grabbed that. But I don't mind that we didn't, because we swept 2 levels from back here. Took out all that liquidity. And holding this low actually structurally makes it more bullish, so we don't have lower lows on a higher term time frame. So that's really all good to see there. Nothing on the chart scares me, but because we got that massive pump, do expect to retrace into these imbalances and have that flush down sometime during the stream today. But let me go ahead and get into any of what you guys are saying in the stream chat below. So will this be a sell the news event? No, it will be a volatile event. It'll swing in every direction possible, and then by the end of the day, it will probably be at the same price that it was at the beginning. So I really don't expect a sell the news event. What will be a sell the news event is when the Fed actually does cut. Okay, so that's what you want to be watching out for. You know, just because they announced they're going to be cutting in maybe even July, but definitely September. If you look at CME Group, we'll look into that in a second. But yeah, they're predicting 70% rate cuts in September now. So whenever the Fed does cut rates, probably want to be getting out of the markets at that time. If not, you know, kind of front running that and getting out when you do see the euphoria going into those Fed cuts. So yeah, today I don't really think we're gonna. I don't think this news event is going to really cause a big sell-off in the markets or anything like that. I would expect the opposite, if anything, but I don't expect anything to happen immediately. Like I said, it's going to be volatility, and then price is going to resume back to the mean, and then following, you know, in the next couple of days, once the markets digest the numbers, then we'll go in the direction it wants to go, which in my opinion is up. Cuts later, cuts now. Anyway, bullish in my opinion. Let's see. Yep, that's what I've been saying. Basically, we either cut sooner and we just fly to the moon and max retail euphoria, and then we actually just top out sooner, or they delay the cuts until maybe November, something like that, into election season, and then we have a slower uptrend now into the parabola later on. Miat. I probably butchered that name, but he says, hello, mate. What is going on? Good to see you in the chat. Racer Ski, OM Gosh, Crypto Gooner. What is up, Racer? Let's hope for rate cuts now, July or August. Well, it cannot be August unless it's an emergency rate cut, which we don't want to see. But yeah, July is definitely possible. I think September for sure. But yeah, I mean, I'd be down for rate cuts sooner. That just means the violent rally starts now instead of having to wait for it. But that would pull back when the actual top happens, and it probably means we'll top out lower than if we would have pushed back those rate cuts later on. But yeah, I'm totally down with a July rate cut. Let's get this rally going. Let's get the altcoin season. This beat is sick. Yeah, you like the synthwave music and all that. I got like a playlist going on right now. It's all copyright free music. Audio check. Check. What color tie do you think Jerome Powell is going to be wearing? I'm going to go with a red tie. Let's see here. Please be a purple tie. Let's see. Would you happen to be familiar with Daniel Igor Severin? I'm not. No. Please explain more. Let's see how many people we got in this. 43. Wow, you guys are killing it. No, I gotta give a big shout out to everyone that has been watching the channel recently. Started about 3 months ago. It was a slow start, but I think the channel is looking real bullish. We are going parabolic. The last few videos have been hitting the algorithm nice. So appreciate all you guys for supporting the channel. And let's see if we can get to that 1,000 subscribers. We're near it. Passed 800 yesterday, so that's awesome to see. Let's go ahead. Let's talk about these numbers, though, because we did get CPI that was announced today. Let me pull this up right now. If you want to know the beats going on, this is the playlist here. If you want to like screenshot this is what I've been using. If you like the beats, but we got the live stream, 49 minutes. So we'll be keeping our eye on this. We will be watching that live. And then, oh, and actually you probably can't, you know what? I forgot that. Here, hold up. 1 second. Now you can actually see what I'm listening to. If you want to screenshot this. Probably don't, but there's that. But yeah, this will go live soon. And then let's talk about these numbers. So over here on the Forex Factory, the economic calendar, we got CPI coming in cold. So month over month, 0.2% versus the expected 0.3 for core, and then normal CPI 0% raise. So we're still, inflation hasn't really changed too much, right? This doesn't mean a whole lot other than inflation is no longer a worry. So it is more likely that the Fed is going to cut sooner. But as always, Jerome Powell is going to be very conservative. He's not going to want to signal anything. He's going to be very in between. He's going to say some dovish stuff. He's going to say some hawkish stuff. But we do have unemployment going up and inflation going down. Tells me that rate cut's coming, which is bullish in the short term, bearish in the medium term. Like as soon as that cut happens, it's because they're trying to stimulate the economy because employment's going up. So yeah, it's a good thing for us in the markets, but it's actually a pretty bad thing for the economy. So yeah, we'll definitely see what happens here though. Cold CPI is the reason I think we got this pump on crypto today, for sure. That is good. We definitely wanted to see CPI come in lower than expected. Inflation not being a problem means they can turn the money printers back on. If we look at CME Group's Fed rate cut predictions, this is what's the most accurate thing we can look at to predict what they're going to be doing. When it does come to these FOMC meetings. And obviously today, 99.9%, they are going to stay paused. That's no question. But we do go to July. This has risen up about 10% from yesterday. So there is definitely a real chance we are cutting in July, although it is still like 85% we're not going to. But this will definitely change after today's meeting. If he sounds very dovish, if he sounds like he's worried about unemployment, if he sounds like he's not worried about inflation, you might see this go more up to like a 50-50. September has now gone up to a 70% chance of cutting. So yeah, they should be cutting in September. This is something that's been pretty 50-50, and we are now finally seeing this go way more into the side of cutting. They're even predicting a 10% chance of a 50 to 75% or 50 to 75 basis point cut, which the more they cut, the worse it is because they have to stimulate more. But retail will assume the opposite. So I'm assuming this rate cut's going to be exit liquidity because for some reason retail does not understand why the Fed cuts rates, and they think money printer go burr. So that means my coins are going to get pumped. When in reality, it's like, well, why is the money printer going burr? It's because the economy is broken, which inherently means your stocks are going to go down. We can look at November though, and we do see November. They're much more likely that we are going to be into the cutting cycle at that point, and that's why they're predicting that 50 to 75 basis point cut in November. Just keep going. Look at December, and I mean all this stuff is going to change when you're looking that far out. But those are just the numbers there. What we want to be watching like a hawk is July rate cuts. This is going to be July 31st, so end of July could be when the top comes in if they do decide to cut. So we'll be watching that closely. All right, let me go back to this so I can see the chat. All right, what else do we have? No red tie means we dump. Oh, we're going to dump no matter what. But will we pump after? Probably, right? This is what's probably going to happen. I mean, this actually looks like a bullish structure here. I wonder if we have a hidden bullish divergence. We'll check that in a second. But yeah, we probably go like this. Oh, Fed meeting starts. Bye-bye. Oh, he's acting dovish. Oh, we're sending up. Oh, market makers want to bring it back down to grab longs. We sweep this. All right, now we're actually going. Something like that. You think retail is coming back, or are they tapped out? I think a lot of retail is already back. We saw them come back in March. If you were here in 2023, you know it was a ghost town. When I was buying all my coins back in, really kind of the October timeframe, I mean, people said October is going to be this really bullish month, and then it turned out to immediately have like a dump at the start, and people just got so uninterested and just left the scene at that point. And of course, that was the start of the bull run. But yeah, so whenever we broke all-time highs, I think retail came back in full force. But are they bullish right now? I don't think so. I think a lot of retail is shorting Bitcoin. I think there's a lot of liquidity to get squeezed to the upside. I don't think they're buying. I don't think there's euphoria in the markets. So yeah, I do think once they see this Fed cut, they're gonna be like, oh well, that's bullish now. We're gonna have to buy. We can't stay out of the markets anymore, and then they'll end up buying the top, probably after they see the pump. Love the content, man. Thank you, AJ. Thanks for the playlist. Screenshotted. Let's go. Dr. Johnny Mois just gave you a shout out. What? Someone gave me a shout out. Dr. Johnny? Is this a YouTuber? I'm so confused. Dr. Johnny Moass. I just looked that up on YouTube. I'm not seeing anything. Let me know what that shout out's about. I'll give him a shout out back. Favorite alt buys right now. So, man, I hate giving away altcoins to buy because like the time to be buying was in the bear market, and a lot of the stuff that I do really like is kind of at the highs. But there is some stuff like Metis DAO. I think that's my favorite layer 2 for Ethereum. That's gotten a nice, correction. It's still up about 5x from the lows, but that's a potential play. I think that's still going to do probably 10, 20x is realistic for Metis DAO. I also really like Tau. That one has pulled back. Still up a lot from the lows, but Tau Batenzer I think is the best AI play overall. They have kind of the most advanced tech that is being used in the real world. They're a pretty advanced chain. They also have projects building on top of them. Caspa is my number one pick. That's kind of my biggest bag, but Caspa it just like break all-time highs a couple days ago. So, is that one the best to FOMO into right now? Maybe not. Maybe you could buy some, but I do really like Caspa, so that's one of them. And then someone asked about meme coins, and I guess we'll get into that. That is actually my biggest bag right now is Mog Coin, but I am not going to show you Mog Coin, even though it is my favorite meme by far, and I think it is the next Shiba Inu. It's up about 100x from the lows. So, do I think it's still going to do a 10x? Certainly. Does it have a lot of risks though? Certainly. But yeah, Mog Coin, it's the one coin that's going to mog them all. They built in the bear market like crazy. We had the craziest chart throughout the entire bear market, and it absolutely went ballistic when we did get that retail euphoria back in like February, March. So yeah, I mean, that's turned into my biggest bag just because of how much it's gone up. And I'm not selling here, that's for sure, but would I be buying now? I mean, maybe. Buy a little bit of Mog. Everyone's got to have some Mog coin, some of the sheep of this cycle. Thoughts on Doge? I mean, it's not going anywhere. Doge it'll perform, but I think it's going to underperform all your other good meme coins. But if you can't, I don't know, it's very hard to find what memes are going to really go up this cycle and which ones are just going to have a pump and dump. Since 99% of memes have pump and dumps and they just die off, if you don't know what you're doing or you just want to play it safe, like Doge is not a bad buy for your meme coins. And we can actually look into some of this. So let's go ahead. Let me see. Yeah, so I have the stream on this view still. I got to make sure to switch that around when we do get to that Fed meeting, but I will go ahead and we'll look at some altcoins. I know this is something you guys are gonna want me to look at. So if you have any altcoin suggestions, let's do that now before the Fed meeting starts, and then we can look at this again after the meeting, and we can go over all your altcoins and analyze this stuff. I actually have not looked at Doge too much recently, so this will be interesting to see what we got going on here. We're just going to do a simple fib analysis. You can see holding that golden pocket, so that's nice there. If we go over to some of our divs, let's see what we got going on. Not too much to speak of as far as like bull divs or anything like that, at least on shorter term time frames. You got a nice exaggerated bull div over here at the lows. And what is it doing compared to Bitcoin? It's definitely outperforming Bitcoin by about a 2x. So yeah, definitely if you want something that's going to outperform Bitcoin in an uptrend, I think Doge will do it for you. So not a bad play at all. Price targets on this, I mean, obviously I can't really give you a price target because that's just impossible to predict. But I don't know, we'll make an all-time high again. I see the case, but we'll just have to see what Elon does. It's just gonna this is the Elon's coin, so if he wants to really send it to all-time highs this cycle, I would not be surprised to see that happen. But we are quite a far ways away from our golden pocket, so just be cautious when we do get up into this area. If you do see that retail euphoria into the markets, this could be your top for Doge, something like that. Probably wouldn't actually do distribution. It would probably just do one of those. That's historically what meme coins do. So just be watching out for something like that. But yeah, if you do get up there, I mean, from current price, that's a nice 200% gain. So not a bad play at all. If you're a stock market investor, you're going to love a 200% gain in probably just a couple months, because like I said, these rallies happen fast when they do. All right. Metis with a T, METIS. Do your own research. Don't just buy something because I said it's the best layer 2. Make sure to do your own research. And like I said, it's up off the lows, so you know it's a riskier investment than, I mean, really anything in crypto is going to be a risky investment right now. But it's not like it's not worth the risk, right? There's good reward for the risk you're taking for any plays right now. And the chance that we are topped, in my opinion, is low with the S&P doing what it is doing, and with our macroeconomic indicators pointing towards a blow-off top before the Great Depression. So I still think we got that rally ahead of us, and yes, Metis, METIS, sorry. July is real for a top, or is it too soon? Oh yeah, it's very realistic. It's possible, especially if we do just get a Wyckoff upthrust after distribution. So if we are already in the distribution phase, and all that's going to happen is we pump up here, upthrust after distribution, and then re-roll over, right? This could be a July top for sure. Is it my base case? No, but it's like not. I don't think it's unlikely. It's definitely something I'm going to be watching out for. Base case would be more of like, let's hunt up to 100K and then maybe we have some sort of smaller distribution before rolling over. But yeah, I think both those scenarios are very likely, and a top in July is certainly possible. Yeah, July, August, September is what it's kind of looking like right now. No shot. Where do you buy that shit? Where do you buy what? I'm so confused. Where do you buy that? We talking about Altcoin? Because you can buy it on like every exchange now. You can buy it on like American exchanges, like crypto.com now. It's on Bybit too. Actually, I don't know if it has a spot listing on Bybit or if it's only perps, but Mustafa, let me know what coin you're talking about specifically. Mog to the moon, yep. Brett for sure. All right, Brett. I know this is a meme people have been talking about. Seems like memes are people's choice of this cycle. No one's interested in altcoins, which is funny. So maybe I can get the actual Ethereum pair. Good gosh. You know what? I might as well get this up because I know people are going to be asking for meme coins. Why does it always go to x.com? Alright, so bread. Oh yeah, this thing's just been kind of up only. Interesting. So, you know, it's a Pepe themed meme. A lot of them are. I've seen Brett around the block. It's on crypto Twitter quite a bit. So they got a nice community going on. You have a good amount of liquidity, 15 mil. You know, but the market cap is massive, so it's not going to have the upside potential as other things. I think there's a good chance it's already topped. Like, would I be buying now? Absolutely not. In my opinion, do not buy Brett now. If you are holding from the lows, though, I mean, you're up 5x. Usually, people aren't really looking to sell until about a 10x. So, just psychologically, I do think we could probably push up to like this 0.3 level where people are going to be wanting to take profit higher up. So finish off the parabola. Good gosh, let me make this a little bit better to see here. Looks like Bitcoin is lifting off here. I don't know, we could finish off the parabola before topping out. Not really too much to say on Brett, other than don't buy it now. Probably don't buy it now, at least. I don't know. I'm not giving you financial advice. Do what you want. But yeah, liquidity is fine. Market cap is just big. It's not going to have an upside potential as something else. Like, you look at MOG and I would rather buy MOG at the current price. You know, even though MOG is up about 100x, it's still only a $450 million market cap coin, about the same liquidity. But yeah, I mean, you look at this chart. This is where I was buying. Down in here. I remember being in this coin at these lows. Man, this was the depths of the bear market. There was so much fear going on, but the MOG community did not waver. We were staying strong, and that's how I knew this was gonna do something like this, and we were the next sheep because the community never went anywhere. We've been mogging the timeline ever since. But yeah, you have seen a decent pullback here. So like, this wouldn't be the worst coin to actually buy in this area if I go ahead. Not that. This is Dex tool, so I'm not. Yeah, there we go. Okay. Pull fixed range here. And then we want to change settings. If you want to know how to set up a fixed range, this is kind of what I do. Right here. So to be not developing point of control. Alright, actually, I guess they don't have value area high on Dex tools. Interesting. I mean, they do. They just don't have lines that extend for it. So let's pull this to Pico top. There, something like that. So that's your value area high. Because we accepted this range, it is possible we pull back point of control. I don't know why I'm doing TA on MogCoin because you didn't even ask about it. But yeah, I got carried away there. Anyway, don't buy either of these memes if you don't do your own research because there's other stuff that is safer. But yeah, let me go ahead and keep reading the chat. Doge short squeeze at 17 cents. Maybe. Curve and OBSEC, okay. Do I just keep looking on here? I know OBSEC is on Dextool, so I might as well. Bitcoin's dumping. Not really. Hold up. Going into a 500 Long limit wall on Binance. Let's see how this feels. Failed auction right here. 335 Bitcoin being sold off into 0 Bitcoin being bought. But will it accept above? And you can see right there, it went down. So you have to wait for these. You got to wait for the failed auction to form. You got to wait for that imbalance to happen. And I mean, that's pretty proper. You see all these limit walls, how they soaked up these sellers. Let's go to a 30-minute chart. That's my preferred time frame. You also see, okay, we had 1,000 Bitcoin wall down here. They took it out. Probably placed it here, so I guess. But yeah, we have eaten into these single prints, and we're bouncing out of it. So we're already finding support on those single prints, on these big walls. Small failed auction at this level. See a ton of sell imbalances. So this is the real question. Can we get above the seller imbalances? Yep, we're seeing the volatility start. That's for sure. Go to like a 1 minute candle. Look at that 1 minute candle. And you can see all these seller imbalances we got to break through. So yeah, if this can get on top, then that's bullish. If not, we're just going to reject off the sell imbalances. But yeah, we're seeing buy imbalances pushing us up through here. Yeah, I mean, look at that. Sell imbalances at the bottom getting absorbed into limit buy walls. Now we're just going to see if we roll over here, which we probably will, because FOMC volatility is probably going to just swing in all directions. Let's go back to our charts. So OPSEC. This is, they are built on top of Tau. So like I was talking about earlier, Tau Potenza, they got some projects built on them, and OPSEC is one of them. They do like anonymous stuff. I really don't know too much about them, but inherently the name OPSEC, they're all about anonymity using the Tau network. But if we were to go ahead, let's pull a fixed range on this now. Let's do the whole range, see where that get us. Okay. Let's go ahead and do the accumulation range. Okay, yeah, you are holding where you want to hold. You want to hold this level in here. Let's find a more realistic accumulation range. Probably let's do the uptrend. Point of control is here. So yeah, as long as you can hold this level, this actually looks good for a potential low coming in here. You also have daily bullish divergence, like very higher time frame kind of thing going on there. Go to like a 1 hour. Probably gonna pull back here on the short term, but yeah, we just want to be finding support at this level. So yeah, OPSEC, not bad. I don't know. I heard about them as being a Tau subnet, and that's pretty bullish if they're actually developing what they say they are. So yeah, do your own research on that. Curve. Let's talk about Curve. We'll go back to TradingView now. Curve, yeah, it's gonna be, let's look at, let's see if Bybit has a good chart on it. I don't know if that's the chart we want to be looking at. Probably Mixi. Alright, yeah, this is a little bit of a better chart. So it went through the 2020 bull run, and I can't lie, this chart looks terrible. I don't know much about Curve at all. Curve Finance. I feel like I heard there were some like sus things going on with this coin though. I feel like the team's scamming or something like that. I have no idea though. I can't verify that. I mean, you are like finding support where you kind of have to, but this is like all-time lows during a bull market usually you want to sell your losers and buy winners. So this is clearly not a winner. And you're even rejecting off of this low now. So yeah, could this have an epic rally and send up to like golden pocket? I mean, that technically would be realistic, right? That's probably some good gains if that were to happen. Yeah, you're looking at a 10x just for a golden pocket retracement. It's possible. Everything goes up in a bull market, but I would be very cautious onto why this has underperformed so much. So definitely do your own research. Still bullish on Tectum and GPT, or stick to Tau and Metis? Yeah, for sure. I think the narrative for Tectum is not quite there. You know, it's not an AI play. It's not an L2 or anything like that. It's not a meme coin. It's not a... I mean, what else is good this cycle? I don't know. They just don't really have a good narrative for it. They have utility if people are using them, but I just don't see the adoption happening. And the chart doesn't look the best anymore. You know, it certainly was a good performer early on. But yeah, currently it is certainly underperforming. We are back at big support levels though. So if you are going to find support, if you are going to be buying on at a good level, right? If you do really like this coin and like the fundamentals, then we are certainly at that range. I like the devs. They're very transparent on what they're doing. And I guess you haven't really made it back to value area high of the bear market range. So yeah, we still have big support below us. I don't think this is the worst thing to buy ever. Certainly, I hold a bag myself, so I haven't sold. I did buy it like $5 though. I bought Tectum right here. I bought on the ICO launch, or well, the launch after the ICO, and then I also bought during like this range here. And I've not sold. Not sold anything. Probably should have sold some, but yeah. We'll see what happens here. This is your level you want to hold on Tectum. Okay, let's go. Chain GPT was the other one. These are two coins that I talked about on my coin ranking videos. So yeah, I hold both of these. Chain GPT, you know, this is something that does have a good narrative. It's an AI play. They got an ecosystem building on them. So yeah, I think this could potentially just be a bullish correction, especially if we do deviate. If this is just a deviation below the golden pocket and we are to hold this, right? This could just be a deviation. I wouldn't be too worried about this drop. This is, in my opinion, just like, hey, something to scare retail, because I know a lot of retail were getting into this coin. I was seeing it getting showed on like bigger YouTube channels, that sort of thing. So not really too surprised. It's, you know, having a bit of a dump here with the rest of the market. So yeah, you just want to see this golden pocket get reclaimed, but we are at big support levels. If we were to pull a fixed range here on this kind of accumulation range within here, that's your value area high. So yeah, you still have big support. I wouldn't be too worried about Chain GPT. I do think it is still a good play for sure. Yeah, I could see you buying here. I bought mine. I was buying here. So it's only up like 250% from where I was buying most of a lot of other like plays that have been performing really well and I think are really good are more than up 200% from the lows. So yeah, you're getting in at pretty much those bear market ranges at this point. And I do think it could be a like potential 100x play. Is that realistic? It's not conservative, but I think 10x would be safe on this. I think it'll perform. I think it'll probably make an all-time high here. Can you guys hear the music, by the way? This beat code is kind of hard. There's some groovy like jazz going on in the background. My biggest problem with trading, I buy the dip, it goes lower, I'm stuck in the red. Okay, then you're not trading properly. Unless you're talking about spot trading, which spot trading, I mean, that's acceptable. But if you're leverage trading, if you buy and it goes lower, you should be out of that position. You want to get out as soon as you get invalidated. You don't just wait for it to go lower and then hope it goes back up. No, you're identifying levels, waiting for price to get into those levels. Once you identify your edge, so after it gets to the level, you identify your edge, whether that be a bullish div, failed auction, you have open interest CVD going in your favor. You see a big liquidations either side. Maybe you see a sweep structure, right? I kind of have to see a sweep structure. That's what I trade off of, swing failure patterns. So identify your level. Once you see one of those confluences or multiple of the confluence, preferably, then you go ahead and enter and you put your stop at, let's just say, the wick. If it's a swing failure pattern, you put your stop at that wick of the swing failure pattern where the failed auction happens. And if it goes lower, you're out of the position. Okay, there's no questions about it. You don't get emotional at all. It's just you got your setup and you trade your setup. If it doesn't work, that's just probabilities, right? It's all just probabilities. Not every trade is going to be correct. Realistically, most of your trades probably aren't going to work out. Like I would say 4 out of 5 of my trades, I do not win on. I don't get my full TPs, but 3 out of the 5, I get stopped out at entry or take profit or small profit. And then 1 out of the 5 will actually get stopped out at a small loss, whereas the one that I actually do win is going to be 10x what that loss was. So that's how you really want to think about trading. It's just probabilities and having an edge in the markets, having that good risk to reward, not trying to be right. You never want to think about, oh, I should be right on this trade. It's just about having that strategy. XRP. So XRP is one that is very interesting. You can see I have some fibs. I was looking at this. I think a short squeeze is pretty imminent on this. Yeah, I think we've kind of deviated prior cycles somewhat on this, but we would be right here on XRP. Potentially, I don't know. When is this? January? Yeah, we could be in the January timeframe of last cycle. This is something that performed very well early on in the bear market, whereas during the bull market it has done nothing. So something to note, right? It's not like it's just been bearish this whole time. It's just because it performed very well in the bear market, didn't go down that far. That's why it hasn't really had its pump, and I think it'll pump at the very end. That's historically what it does. It waits to the very last second of the bull market after Bitcoin's already topped, and then it just moves to the upside. I think shorts are a big play with this. There's a lot of shorts in the market here. They're going to use that as fuel to the upside. So I certainly do think the lows in on XRP. This wick should hold. I don't think we're going any lower. This is one of your safest plays in crypto right now. If you are thinking about entering with big money, I mean, you are entering in the bear market lows of a coin that historically stays kind of near its bear market lows. So it's not like it's a bad thing that it has been underperforming. This is just kind of what XRP does. It just trades sideways until Bitcoin's fully topped, and then it'll just rip to the upside. And I do think it could do pretty well. It's got a decent narrative, although we haven't seen the narrative really play out. Something like Quant and XRP, that narrative just hasn't really had its time to shine. But I think it eventually will. And then price targets are going to be conservatively about $1 into this golden pocket. But I could see price discovery on this for sure, because it wasn't on all your big exchanges last time it topped out over here. So I think now that it is regulated and on more exchanges, we could see this go $5 potentially, right? Nice 10x. Zen. Let's get Zen real quick. How much time do we have to this Fed meeting? All right, we got 15 minutes. So let's try to run through these altcoins quick. We going up or down? We'll get into that in just a sec. Hold up. Zen, is this the actual Zen coin? Someone asked about this in the Discord or something like that. Is Is this the actual Zen coin? I gotta go to Dex Tools and look at this. Zen is in the nicotine pouch. What is it? Zen coin? I might be right. There was an actual Zen coin with Tucker Carlson. That was a meme. I'm not seeing that on there. Okay. I guess we're just gonna do T on it. No, this is Horizon. Okay. I'm gonna assume you're talking about Horizon. There was a someone asked about a meme coin that was literally just Zen meme coin with Tucker Carlson on the website. This thing though, it's another one that's just underperformed. Yeah, underperformed massively. Still in the bear market range, but could it have an epic rally to the retracement? Maybe. A lot of these coins are going to have big dilution though, so you got to look into that. Are they having supply dilution? And is that why it can't go up? And if it's had a lot of supply dilution, this golden pocket is completely unrealistic and it'll never happen. But just on a TA basis, I mean, you're looking at a 10x to that golden pocket and you have been trending up here. So I think, you know, launching out of this range is definitely possible. You know, higher lows on price here. Your risk is pretty good because you buy in this range, your invalidation is very clear. You just don't want to make like a lower low here because you have been trending up. You want to hold these higher lows. You have a clear invalidation and a potential to get a nice 10x. I know nothing about the coin though, so do your own research. Okay, volatility is on, all that stuff. Yeah, we talked about the volatility for a second. Filled these walls, came back up, could not fully accept above the sell imbalances. Just coming back here, back above golden pocket locally. We are seeing lots of volume come in though. You see 400 Bitcoin short wall coming in here, so I think we're just going to see a lot of chop in here in the anticipation for the Fed meeting, which is in 12 minutes. What do you mean by imbalances? Okay. Let me make sure the stream can see this. It can, okay. Do you see these candles in here, how they have numbers on them? You have, let me draw this out. So you have your candle, and then you'll see like numbers in here. What are these? Right? These are your actual buyers and sellers within that price on the candle on Binance futures. We're looking at Binance USDTM contracts, which is the highest volume exchange pair in crypto. So essentially, on the left side of this candle, we have sellers. On the right side, we have buyers. So you see at the top of this candle, we have 54 Bitcoin being shorted compared to just 0.03 Bitcoin being longed, 234 Bitcoin short versus 0.01 Bitcoin being longed. Those are seller imbalances within a candle. And then you see down here at the bottom, we again have more seller imbalances, right? 9 to 0, 77 to 0. But we bounce off of this level into these big buy walls. These are like actual limit orders in the order books on Binance futures, right? This is why Trading Light's so awesome. You can see the full order book where all the buyers are. We have like $1 billion worth of long positions being limited in the order books lower. But after you saw that bounce and recovery off of this level, because you had these sell imbalances and price did not go lower, that means that someone is absorbing these seller imbalances, creating a failed auction. The auction failed at this level, which means it's likely not to accept. So when we get back down to these seller imbalances, price is likely to bounce off of them. So we see seller imbalances to the downside act as support, seller imbalances to the upside act as resistance, and vice versa for long positions. So that's how you can use imbalances. Any good liquid play on Solana? We talking about like Solana ecosystem or Solana itself? If we look at Solana itself, think we're going to be going up to that all-time high break here soon. You're going to see a lot of euphoria in Solana when we do break all-time highs. This has been a pretty bullish chart. Again, we're at the highs, so you're going to have risk buying here versus buying in the bear market. It could roll over, theoretically, right? But I would not be surprised to see this squeeze up. And when you do break these all-time highs, this is when you will probably see max euphoria in the Solana ecosystem. So if you're looking at Solana meme coins, that sort of thing, as long as you find the right projects, they are likely to moon at some point. But we also have that Ethereum ETF speculation and all that good stuff. So I think ETH could also be a big ecosystem, versus Solana in the short term whenever we do get that. Actually, I just hit a button and it brought me to this. This is something that I drew out. I don't know how it got me to this. What exchange? I'm so confused. My phone just hit a random button on my keyboard and brought me back to this. This is some analysis I was doing at these lows down here or something like that. This is something I made way early on, back in the bear market. I was like, hey, we might have a top in this area. I was pretty close. I was pretty close to the top. But based on economics, this was if the Fed had already cut. If the Fed was cutting in April, that would have been my predictions. Because the Fed hasn't cut yet, I think we're going higher. Look at TradingView. Yeah, Zen Horizon. Okay. Yeah, Zen Horizon. That's it's just something that was underperforming, but I don't know anything about it, so it could have a nice 10x up to the golden pocket. Who needs TA? I'm about to YOLO on to Mog. Mog or get mogged is what they say. As long as you're not risking more than you can afford to lose. Let me see, I'm missing some stuff. I'm sorry guys, there's too many coins to be able to cover this all before the FOMC meeting starts. But if you do, make sure to join my Discord, links in my description, and post any coins you want me to look at, in the community TA section or just wherever, and I'll send in a chart and give you some ideas on it. You skip Kitty, bro? Okay, I'll look at Kitty. I didn't see you put that in there. Cat coins might be the move of the cycle. Mog is a cat coin. Oh, Kitty, the roaring Kitty. I had someone send me this when it launched. Let's see. Oh, this is a different one, I guess. There was a new kitty that just dropped. Problem is, there's too many kitties, so I don't know which one you're talking about. I guess it is this, right? Roaring Kitty on Sol. I thought it launched very recently. This chart right here looks like it wants to roll over, but it's got decent liquidity. Market cap's not too crazy. But yeah, I think if it is based on Roaring Kitty, that narrative, I think that narrative's ending, right? We already had the big news events on it. I think you're seeing these coins in the distribution phase because it was kind of a sell news event when he did the live stream. I think that was your peak euphoria for the Roaring Kitty. I don't know if we're going to have another GameStop short squeeze of the cycle. You could bet on it, but I wouldn't bet too much money that we are going to have that. TA for Mog, please. I did some TA. Like I said, I haven't sold anything. I think it's going to do a 10x, but it's a meme coin. It's got risk. Are you going to go over what Paps does live? Absolutely. Probably not much while he's actually talking. I'll let you guys listen to it. But we will certainly discuss it right after, and I'll make some comments while he's talking. Toy used to show a heat map of volume and liquidity. Okay. You're talking about Trading Light here? So Trading Light link is in my description down below. You can I pulled an affiliate link off them. I'm not actually partnered with the exchange, but I grabbed an affiliate link. So we both get $10 towards our next monthly subscription if you do use that link in my description below for Trading Light. And then I also have like an actual liquidity heat map, which is free. This is Coin Inc. So, yeah, liquidation heat map, Coin Inc. All of the links to the trading software I use are in my Discord. So make sure to join my Discord and look at the trading resources channel, and I have all the links to everything I use in there. Rune. Yeah, like I said, I don't think we're gonna have time to get to these. We got 3 minutes. 3 minutes here. I gotta get the it set up. Ask me in the Discord if there's any altcoins I didn't get to. Just ask me about them in the Discord, or ask me about them after Fed Jerome Powell talks. We can probably get into them later in the stream. But it is about to be volatility time. Let me get this stream set up. Okay, yeah, I gotta add. Oh yeah, I don't even know if I'm gonna have time to do this. I did not set this up properly. There, let me go ahead. This shouldn't actually take too long to do. Display capture. Still got 3 minutes. I am editing like my OBS right now to make sure the stream is going to be all good. If you're wondering what I am doing. So this is going to be kind of scuffed, but should be okay. So essentially, it'll look like that. I'll go ahead. So what we're going to be seeing here is Bybit, open interest, and CVD. Bitcoin price is here, and then let me switch this to the S&P and dollar. So we'll be seeing that in the bottom right. We should see volatility in all of these assets pretty much immediately. I'm expecting a dump, then a pump, then a dump, then a pump. Let's see what it do. Waiting for CNBC. Let's see. Is their stream going to break, or are we gonna have this work out? Guess we can look at our open interest going into this. We do see people opening up shorts on Binance, and we see people opening up the longs on Bybit. So Bybit's going long for this. Binance is going short. Let's see who wins. Let me go through the chat real quick before we get into that. Alright, so we're just waiting for Jerome Powell now. Let me know if the audio is good. I mean, they're not talking right now, but whenever he starts talking, make sure to let me know if that audio is good or not. Just probably actually turn it up just a little bit. Let's see here. right. What do you think about Polkadot? Polkadot's been something I've been keeping my eye on. I think Polkadot's a very safe play that has a real potential to do a 10x. I think Polkadot and XRP are kind of very similar as far as like risk to reward. I think Polkadot will perform good. And I like Polkadot a lot more than XRP. I think they got a really cool ecosystem, a lot of good utility. Fed holds rate steady. I mean, that's known. Yeah, they're paused today. That's no question there. It's about what they signal for the next meeting. Bitcoin FD USDT pair USD pair. Yes. All right, we got him talking.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace.
It is purple.
Solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong but a bit below that seen in the first quarter. The unemployment rate ticked up but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7%.
I don't think they're going to cut in July. Just first impressions.
Food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
So he pretty much didn't say much, as was to be expected, but he certainly signaled he's not like super dovish. We're probably not cutting in July, which is good in my opinion. I actually want to push out that rate cut further. It means the markets can go up for longer. Looking like September, maybe even November.
PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December really, and we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So It's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher, 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamaros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible, but I look at
That was hard to
think
hear.
that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it that is on the committee
I turned it
a
all the way
really
up.
strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier.
That should be good. I just listened to it on my phone.
We want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings. It's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth.
All right, we are starting to see the volatility.
And you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response, which is another thing that could happen. But again, we don't see that, and we see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant
That's interesting.
that would warrant beginning to loosen policy at this time.
Buy orders got taken out.
Did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers?
That is very interesting.
Today?
So this happens too often, but it does happen. It just is, data came out.
There goes
It
your $1
happened
billion
a couple
worth
of
of buy
meetings ago,
order.
a few meetings ago. So when that happens, when
Question
there's
is,
an
are they
important
moving them
data
up?
print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that, and some people do, some people don't. Most people don't. But, and I'm not going to get into the specifics, but you have the ability to do that, so that you know what's in the SEP actually does reflect the data that we got today, to the extent you can, you know, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, you know, kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, you know, some people generally do, but most people generally don't.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in primary
Coming down
labor
now is
force.
bullish.
In terms of on the demand side, you know, we've seen
That would be bearish.
well, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you
Let's see
have
what happens
is
if the dollar is
still
gonna
low
inject these
unemployment,
imbalances
still
or
4%
just
unemployment,
sitting
historically low. But it's moved up a little bit. It's softened a bit, and you know that's an important statistic. But more than that, you've got strong job creation. You have
See if we can
payroll
hold
jobs
this,
still
or if
coming
we're gonna
in strong.
retrace into it. I
there's
would
an
expect
argument
to
that they
kind of
may be
retrace into
a bit
these, but,
overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different.
This is
tales.
not what
There's
I
been
imagined
some
by volume
divergence,
swings.
especially,
No, yeah,
we saw in the
it's
last report that we got on
certainly
Friday. So how
not
do you
normal
interpret
volatility. I think it's
that,
because we
and
front run the
how
volatility.
does
We
it
already
affect
had
your view on the labor
big
market?
pumps, and
sometimes
then I
it's-
think
you
this
can't
we will
reconcile,
see the
the
rotation
differences.
down.
You
Just
have to-
just give
have
it
to look at
time.
it
Once
and-
this
and,
starts
try to
filling, it'll
understand.
probably
And
go
that's why it always
fast.
makes sense
But
to
yeah,
look at a
normally you do
series,
have
in
much
6
more violent
months, 3,
swings during
6,
this
and 12
meeting.
months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey.
Yeah, we're going to
So,
the single print. You should see this move
I mean,
fast.
we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come
Failed
way
auction.
down, are still
Swing fail.
greater than the number of unemployed people. The
But you got to
jobs
have
workers
closes above.
gap
We don't know if this is going to
still
hold.
a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
All right, dollar starting to accept back
Chair
into
Powell,
this
Neil Irwin with
candle.
Axios.
Let's see,
Back
see
on the
what it
rates
do.
path, the SEP showed quite large shift of
I'm
rate cut
expecting a full
expectations
rotation.
relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. Can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year. And as I mentioned earlier in the,
Is that trading light? Yes.
What did we take
Light
away
with
from
an
this? We had
I.
really,
It's in the
really good inflation
link in my
data the second half
description.
of last year, then
Sign up with my
kind of a
link and we
pause in
both
progress
get
in the
a
first
discount.
quarter. And what we took away from that was that it's probably going to take longer.
It's actually a rebate.
to
So if you
get the
sign up using my
confidence that
link,
we
you
need
get
to
$10 like
to,
store credit, which you can just use
loosen
towards your
policies.
next
So,
month's subscription.
The sense of that is that rate cuts that might have taken place this year, take place next year. You know, there are fewer rate cuts in the median this year, but there's one more next year. So if you look at
67,
year-end
750.
2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress.
Yeah,
You get
I mean,
another-
this is
you
the
get
sweep
data,
level.
different data today. So we'll have to see where the data light
We
the way.
could hold this,
You know,
though. This
we're-
was
we're,
proper
uh,
swing fail, failed
we're at,
auction.
The
Failed
economy
auction,
has,
swing fail, candle closes
repeatedly
above.
Surprised forecasters
That's valid.
in both directions, and today was certainly a better inflation report.
But yeah, I
than
wouldn't be
almost
surprised
anybody
if we do.
expected. And we'll just have to see what
that's potential.
what the incoming data flow brings, and how that affects the outlook and the balance of risks.
Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. You know, how should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability potentially years in the future.
Buy
where
big
there
got
are no
liquidated on
shocks.
their long
So
positions.
it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly it doesn't really get you where you need to be to think
have
about
open
what
trades?
appropriate policy
No.
is in the near term. But back to your original question.
I'm already in
people have
so
been
many spot
gradually
positions, I don't
writing
really
it
care
up
about it
because I
long
just
right
think
now.
People are coming to the view that
I
rates
would have entered.
are less likely
This was
to go
like
down
proper
to their-
setup. I would have entered this, but I
their
was asleep
pre-pandemic
when we got the
levels,
wick.
which were, very low by recent history.
I
measures.
really
Now,
got to start
we
waking up
can't really
earlier
know
because New
that.
York. I'm
That's
not.
an
I'm on
interesting
the
dispute and
Pacific
discussion
time.
to have,
I'm on the West Coast.
now, but
The
ultimately, we think
to
that
trade the
things
New
like
York
the
Open, I
neutral
gotta
rate
be
are driven
up at
by
like
longer run,
4:30, 5
slow-moving
a.m.
forces.
So I
And,
missed this
there's a really
trade,
good
but yeah, this is
question
where I
about
would have
whether-
entered.
Whether those
Should be in
really
a long
have
from
changed,
here.
or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having
Earth Radio, I see you. Appreciate
the effects
that.
that we would hope for.
Well, thanks to your pal Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and
Catalyst says
acknowledging
make sure
further
to
progress
leave
on
a like. I
inflation
second that.
as kind of a
Make sure to like the
market
stream.
on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing.
Raid
Is
was
the labor
asking
market
about
still strong?
FDUSD.
That's what we're
We can
thinking
look at
about. You can
That's
translate it
fair.
into
There's a
into the
spot.
language you're talking about, but to me the focus is more on we have a
You
goal
can see the
which
peak
is
Bitcoin is only like
price
70,
stability,
much
another
lower
goal which is
volume.
maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal. And then
So
for a while
they're
there was a pause,
starting
and we
to
look at
sell
today's
here.
thing and we think, well,
But they've been buying.
that's a good reading, and
I
we
don't
hope
know.
we get
It's a
more like
spot,
that.
so
In the meantime, we're asking, is our
It is
policy
it's
stance
like
about
the
right?
highest spot
I
trading
think
pair
we
there
think,
is in
yes,
crypto, though.
it's
so
about right. We're prepared to adjust it
interesting,
as
but not
appropriate,
to
but we
say
think,
on
we
Bitcoin
think we're getting
FTUSD.
the things that we would want to get, broadly speaking, and that's why we've been at this policy rate now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate.
A lot of buy orders
Right,
staggering.
4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the
Lots of longs
unwinding
closing
of
on
the
Bybit.
pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had, above trend potential
SPX looks like it's going to hold
and
this.
high
We'll see.
growth, and yet you've had the benefit of inflation coming down, really
perfect
fast
balance on
actually
the-
last year, and we'll see what the rest of this year brings.
Value area
So
low,
these
as
dynamics
well as you have a
can
bullish
continue as long
divergence
as they
from the
continue.
5 minute.
I
You
mean,
guys can't see the
ultimately,
bull data
the
though.
question is ultimately,
Not
are
that it
you down
matters,
to
but
demand? And
see.
we don't know that, though. I mean, look at today's report. If we see more like that, we
we
can't
might
know
just
what
rip
the
up
future holds. But in
to
the
that
meantime, we've
trend.
made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year.
You expect
but
all this
your
to be
growth
filled?
forecast doesn't see
Yeah,
any
it's likely.
slowdown
I
in
mean,
the rest
this
of the year,
low
nor
no
does the
longer
unemployment
looks
forecast see any
super
significant
good.
weakening
I mean, it
of
certainly could
the
hold if we
labor
just see the
market.
S&P ripped to the
And
upside.
your
But
inflation forecasts
yeah,
basically
I
average
kind of
out
expect
to
to
no
come down here
change.
fill this.
So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think
see.
ultimately
30-minute candle
that
closes are what
if you just set
like
policy
to
at a
look at.
restrictive
30-minute
level,
and hourly
eventually
candle
you will see
closes.
real
So if we
weakening
close
of the
above
economy.
this
So
sweep level,
that's always been the thought.
that
is
could be
that,
the odd. Why did my candle
since
just
we
break?
raised
There
rates
it
this
goes.
far, we've always been pointing to cuts.
It
at
actually
a
is a
certain point.
decent failed auction on a 30-minute.
Not to eliminate the possibility of hikes, but no one has that as their base case.
We'll see.
So no one on the committee does. But so that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness.
What is Powell barking again?
We don't really
It's
see
just
that. We kind of see
same
what we
stuff.
wanted to
It's-
see, which was gradual cooling in demand,
It's,
gradual
it's
rebalancing of the
nothing
labor
to
market
take
while we're
note of.
continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect.
This might be interesting.
I mean, ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on
What is
inflation,
wrong
if
with
you
your
can tell
mic?
us a little more about where you see inflationary pressure in the economy You mentioned labor markets coming into better balance.
Let it drop.
Inflation
Market is not
expectations
happy.
appear to be well anchored. You're seeing,
I don't know.
anecdotal stories of the large.
I don't know. I
chains
think
like
the market's
Walmart and
bullish.
Target are
That's why we
announcing
bumped on
price
CPI.
cuts, McDonald's announcing a $5 meal deal. So, people.
I was
might still be
expecting more of a
unhappy about
dump
prices
already.
at the grocery
I'm
store.
surprised we're holding where we
It
are.
doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more
So
about
I
it.
think it's
Certainly
true
could
that
roll over,
the
though.
inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and we've taken some signal from that. But and of course, housing services, you're continuing to see high readings there. To some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic.
Could roll over on any of these questions. It could. I think.
Talking about
I think the market just wanted to make sure he wasn't like super one-sided, and since he's in the middle of the road like he normally is, I think the market's already decided what they want the narrative to be. So if we do pump from here, we already know what the headlines are going to be, that they're cutting in September and that the cuts are coming. It's bullish.
We always want to avoid the tendency to,
or they're going to
dismiss
say,
the
"Oh, he
parts
was
of
hawkish
inflation
again."
that
Like they'll come up with the
don't
narrative
like,
themselves.
and just make it go away. So, but we had a quarter where inflation was running higher, and yes, I could stand here and say.
They could really make it
either
either side. They can say he's hawkish, or they can say he's dovish. He's just straight in the middle of the road.
So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month, and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving.
Did you see rejection on the value area high?
I think that was the
bounce
right
off
thing.
value area.
I still think that's
bounce
right.
off value area.
Now we have today's inflation reading, which is
reject
very
value area
different, very
high,
much more
sweeping
positive.
these.
We're going to have to see what the
on the
trend
S&P
is.
there.
What's
So
going to be the data going forward?
Let's see if we can get
We're
continuation
looking
to the
for something that
upside,
gives us
hold these point of
confidence that
controls.
inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows has a definitive answer why people are not as happy about the economy as they might be, and we don't tell people how they should think or feel about the economy. That's not our job. people experience what they experience. All I can tell you is what the
Jablo
data shows,
footprint
which is
app that you
we've got an
use. This
economy
is
that's growing
Trading
at a
It
solid
Light.
pace.
Link is in
We've
my
got a very strong
description.
labor market with unemployment at 4%. It's been a long time since we've had,
As well as if you go to my
a
Discord,
long stretch
I have
of
all the
time
trading
with
software I
unemployment at or
use
below
on the
4%.
Discord
Very long time.
and the Trading
We
Resources
had a
channel.
period of high inflation.
I can show you that real quick.
Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime,
Right here.
it's going to be painful for people, but the ultimate pain would be a period of long period of high inflation. It is people who, lower income people who are at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that, and that's not what happened. Instead, the U.S. is anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not
Says he doesn't know
that's
why
not how
people
we
aren't
do
up with the
inflation.
economy. Yeah, I think it has something to do with him
and we've been very transparent about it. And
turning the
it's
money
true that
printers
we're-
on and raising inflation
We're seeing
for
delays
COVID.
in realizing what's happening economically, but we understand that. We understand that very
This
well.
is someone was asking CPI numbers. It came in cold,
Edward Lawrence
so
with, Fox Business.
0.2%
Thank you for taking the
core
question.
versus the
So I wanna go back to
0.3% they
jobs and the
expected,
consumer.
and zero month
The
over
last
month
jobs report
for
shows that
CPI.
over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to
Expect
you
the retrace to be done
that
or
the
the
slowing
limits to get
economy could
filled?
maybe
I have
break
no idea.
companies in terms of hiring?
I
or
wouldn't
break the
bet
consumer
on
in terms
either,
of spending?
right? So I wouldn't open long positions here expecting
So,
this to
we
hold.
monitor all
or
the
anything
things you
like
mentioned
that.
and more.
There's really not
what we're
enough to go
seeing
on
is,
to tell me what's going to happen. I
basically
will say the
spending was
dollar
going up faster
swing
than
failing this,
disposable income during a
not
big part of
accepting the
next year, so
imbalances.
last year,
This
rather.
looks kind of bearish, and the
so
S&P
what
looks
that
bullish.
you'd
So
expect to see is people spending more.
I would
on
not be
credit
surprised for
cards.
this to hold.
That has been happening. Credit card balances have been going up.
But these limits are here for a
defaults have been
reason.
going up.
They
They're
expect
not
to get
at
filled.
high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else
Yeah,
sees.
I
but
mean, if we do
we've
come
still
down,
got
I expect
household sector that's in pretty good
this.
shape. But nonetheless, it's not in the kind of shape it was in.
either this
And we're carefully
or
watching
this.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire
So
like they're hiring?
consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up.
I guess
quite
we
a
could do
bit,
3 drives too.
in the wake of all the construction that we saw of new tech plants. So overall, the economy
Something
is
like that.
exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and
Yeah, we don't really have a
the
bull
best
div
thing
from
we can
that.
do
So yeah, that's probably
is-
going to get swept.
is to foster a very strong jobs economy, which we think we have done, ultimately to get inflation under control, because those people experience inflation, very directly, very painfully.
Yeah.
And once
We
once
could see
get
it's 3
inflation under
drives on
control,
that
rates can come
5-minute.
down, which will also improve things.
Hidden bullish divergence, something like that.
Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
Bybit is now short.
When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move and to weaken quickly. So waiting for that to happen is not what
I
we're
actually
doing.
hit that.
We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So
I don't know if that's the system that deleted
and
it
also
or
the fact
actually
we
hit
look
that.
at
I
all
have
of
like the chat on my
whole
phone right now, and I
situation.
was looking at
So,
something else. Had like my finger on it.
A decision to begin to, loosen policy could have several reasons associated with it at a given time. But I would just tell we monitor all the labor market data, and if we saw troubling weakening more than
Is the
expected,
power stream delayed or
then
your
that
stream?
would be something we'd consider responding to.
Power stream
but
is
we look
not
at
delayed.
we
My
look at the broader
stream
context of what's going on too.
shouldn't
like
be very
negative
delayed.
payroll numbers would
You
be-
can see my
I'm not gonna,
OBS.
I can think of things that would
Actually,
many
you can't
things
really
would
see
make it
the
on that
OBS
list,
settings,
but I don't
but,
think I'll utter them here.
It's set to the least amount of delay possible. It's like a 5-second delay or something like that.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you
I
currently?
can't believe you guys are all here.
You know, I don't actually have that kind
It's just
of
like watching a
mechanical
lecture
thing
in college
my
or something.
thinking. I get that.
But worse.
As
Because
many
it's Jerome
good ones as
Powell.
we had bad ones. But no, it's not like that. It's the whole, it's going to be the totality of the data. The labor market data, the growth data, in terms of inflation, you'd want to see real progress that builds your confidence that we are on a
I
path
promise we'll make
down to
the
2%.
stream more
And,
exciting after he's done talking.
I
We'll
don't
look at all
wanna
your
try to,
altcoins
give
and go
you
over
specific
some more
numbers of things in
analysis.
there, because that points to dates.
As well as I have someone on
we're
the
not at a
Discord that
point
might be
of being
hopping in here for a voice chat. We might even just like open up the VC in the Discord. I have a stream voice channel in there, so
Thank you for doing this. I'm
let me know right now in the chat if you want to hop into a voice call during the stream
the
and
impact
talk
of
about stuff,
stronger
give your own like,
dollar
analysis
on
or whatever.
US economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan
Pretty strong belief
and
for me. I
some
had him on another stream
emerging
too.
market are suffering
Interesting.
from
Yeah, I mean this
strong
is
dollar.
CNBC's
So I want to
stream
know
and
if,
it's
it is having a
it's live for
positive
me, and then
impact on
I
US
checked on my
economy
phone right now
in
and
total.
it's like a 5-second delay.
So we don't. Actually, it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, and for our economy,
See if shorts have
what we're
drastically
trying to
dropped
foster
off.
is maximum
So
employment,
Bybit
price
is opening
stability,
up shorts after
and we
opening
feel
up
like we've
longs
made
and
good
getting stopped
progress
out.
on both of those over the
And
course of the past year.
I mean, I guess they're opening up longs now. Some people are opening up shorts now. They're going mostly long. Have shorts been stopped
Thank you,
out
Chair Powell. Jennifer
during this
Schomburg
wick?
with
Here's
Yahoo
what
Finance.
I'm assuming you're talking
You said
about.
you would cut rates before
And we do see open
inflation
interest drop.
rises
We
2%.
saw
You're forecasting inflation to end the year at 2.8%.
17 Bitcoin in short liquidations. Nothing crazy,
2.8%, of
really. I
course,
would have
on
expected
core
more
PCE.
on that wick.
Right now, you said the inflation forecast is conservative, and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also
Yeah,
indicated
we
the
saw
job
open
market
interest
has
drop
mostly
some,
normalized.
but nothing
so
too crazy. If
why
I go to
not cut
aggregate,
rates this summer just once? You're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation.
So
you can see net shorts
we
here has
we're
not
well aware
reset,
of the two-sided risks here,
which is
let me
fine.
just say. We
can still use them as fuel. Then we got to go
we
higher to
understand
squeeze
that
them.
if we wait
This
too
is your
long,
sweep level to squeeze
that
the
could come at the
shorts.
cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done.
My guess
and
is
have to
when
then start
price
over,
accepts above
and it
this
could be
level is
very
when you're really going
disruptive.
to see the
So
shorts
we're
squeezed,
extremely
because
aware
most of your
of
shorts was
both-
opened in
both
this
of
range
those risks and
and
just
up
basically
higher.
trying to manage them. And what we said is that we're
This range here was much resistance.
we don't think it'll be
closing.
appropriate to begin to loosen policy until we're more confident
With some
that
shorts
inflation
open,
is moving
but-
down to 2% over time on a sustainable basis. That's
Yeah,
kind of
shorts
been
are
our
all up
test.
in this range.
Or there's another test, which is an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there, and we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low, so we have the ability now to approach this question carefully, and that's what we're doing.
And just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review.
All right, I'm back. It looks like
later or late in the year.
Bitcoin.
In the meantime, as that time approaches, we will be devoting
Might be
a lot
holding
of
this.
careful thought and planning to the contours of it.
Again,
Within
about 30
scope
minutes. That
would
is
certainly
a
be
somewhat proper
communications
failed
generally.
auction.
I'm not going
The
to
lowest sweep
say
level.
that we'll look at this. Or
Not that that's really a
particular
sweep
thing.
level. It's more of just like
And
a
all the other details, we're just we
short-term
don't want to
grab.
get
We did grab
prematurely
some
into a
longs here though, for
conversation
sure on Bybit.
until it's really time to have it. And so, I'm going to leave.
Oh yeah, S&P.
Pretty much
through
everything else
value, yeah.
to later in the year.
But the dollar's also heading up, so we'll gotta see. Not too much to go off of.
Hi, Chair Powell. Nancy
On the price
Marshall
action.
Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one thing, one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So,
But if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you look at we'd be looking at the aggregate numbers, and asking ourselves what's going on here with inflation at the aggregate level, and of course if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having
chat.
a
I'm kind of
special
over
role.
the FOMC talk. I just want to get into the price action and talk about some charts. Are we done? Let's go. You guys made it. You survived. What did he say? We're not cutting in July, which is cool. I mean, that's kind of what I was hoping for. September rate cut, November rate cut. That's been kind of the base case. Top in election season is still on the cards. That's kind of best case scenario. Let's have this blow off top last as long out as possible. So what I'm going to do now is switch the stream back over to... Actually, I'll probably keep it on this view. Yeah, I mean, I had it to where you could see this too, but we can just go over open interest stuff now, and then the view's better for covering altcoins and all that, if you do want me to continue doing that. If you had an altcoin recommendation earlier that I did not get to, put it back in the chat, and I'll get to it now. But yeah, we're seeing lots of volume. We saw a lot of shorts get squeezed up here on... Looks like these are all Binance. So yeah, a lot of just like 100 to 300 Bitcoin short positions got squeezed up. And I would kind of... I don't know. We might hold this, actually. Oh, yeah, no. S&P's dumping. Yeah, what I was going to say is I kind of expect this to roll full rotation. It normally happens after FOMC. So I don't really know what sweep level is going to be the play. We have a bunch of them in here. They could choose any one of these to grab for FOMC. They could even be like big rotation all the way down to grab this. There's many possibilities, which is why I've said not the time to trade. Unless we got, like, if we got this, swing fail of this level, okay, yeah, that might be a long, but that would have to be, with a failed auction, good order flow, all that. Anything in the middle is just chopping in the middle of a range. But I can't be bearish here when we're dumping because we didn't grab the highs. We didn't grab this, which is cool. This is to be expected though. Pump, dump, pump, and then off and away we go, probably. We go out, look at our daily time frame. We got 4 hours still on the day. So I would like to see this daily candle close in the green, at least like on the minimum. So if we see this into a hammer to the downside, that would be probably just a trap, honestly. It really doesn't matter what the daily close is. Yeah, we'll see what happens. This is when we should get some volatility. We didn't get it really during the meeting. We got it before, so why not get it before and then after? So let's see what happens here. And let's see, we did just get the sweep. So we'll let this volatility play out, and then once I'm confident we're not going to be like doing anything crazy as far as volatility goes, I will go ahead and check out those altcoins. Let's look at total 3. This is something we've been looking at a lot on the channel. We wanted to see this get, swept and held. And we got above this level too on total 3, which is nice to see. So nice swing fail on a daily time frame there. Not bad. I wonder if Bitcoin dominance is going up or down today. Alright, we got lower highs here. So this is the moment of truth. Are we going to break this? Or is it altcoin season? In my opinion, it's the latter. I think there's a good chance we get finally back into this macro trend that we've had since 2017 on Bitcoin dominance. And we finally hunt back down here, which is where alt season, alt season happens. Alright, so we'll be watching Bitcoin dominance. The dollar, you can, oh, you know what? Whoopsie. My bad. Now you can actually see. Sorry about that. Yeah, so you can see the dollar did retrace back down into these, pretty volatile candles we had here, back testing that value area. So we want to see this get under these levels. We want to see these lows get broken, and we want to hunt down here. We do not want to see this flip back into support and start making higher highs. That would not be good for us. And it is currently looking like it might be wanting to do that. So, yeah, we got to be careful here. But short-term price action, I don't care. I mean, we could do something like that. If we go over to the S&P, we're certainly dumping. Next, pull this down so we get the dollar and S&P. You can see the inverse correlation going on here. Dollar pumping, S&P dumping. Now we're getting that volatility for sure. So the question is, are we going to do full rotation, or are we going to hold imbalances as support? That's what we want to see happen. We go to a daily time frame on the S&P. We don't want to see this swing fail. So it's almost impossible for it to happen because we only have an hour left. But we don't want to get back under these wicks, right? We want to see this hold. Do not want to swing fail those highs. That would be massive warning. Could that have been the top for the S&P? It is possible. We want to watch this carefully. That is not a poor high. We did grab that. But, the Fed signaled they're going to be pushing out cuts later. So that just means it's a lower uptrend now into bigger parabola later, in my opinion. So, yeah, all in all, I don't think the Fed meeting was bad at all. It's just telling us, say, we're probably going to chop for more time. Let me see what the chat's saying. What do you mean by trap when you're talking about Bitcoin daily close? Okay, so if this daily closes red, like let's say we close a red daily candle, hammer candle, under the daily EMA. Like this is just one big wick right here, and then this is where you actually close the candle. People are going to be scared out of their minds because we just made a massive bearish hammer candle under the daily EMA. People are probably going to short that, and then we would just rip back up and fill the wick. So that could be like a trap if that were to happen. How does the market feel about his speech? Are we disappointed? I'd say so. I'd say the market wanted to see the cuts coming sooner. They wanted to see Powell being a little bit more dovish so they could, just get the pull off top over with and get out of their positions because, they've been selling. Hedge funds have been selling. A lot of people are net short right now. There's still a lot of bears in the market that just want to have clear skies to get out of their positions before rolling over. Now that he is pushing stuff out, it's like, well, he's just propping up markets, and it doesn't give a clear sign whether to short now or you got to hold for the blow off top. In my opinion, yeah, they're going to want to hold for that blow off top. We see a CME gap here, actually, or futures gap on the TVC, the U.S. markets. So this is likely to get filled. This is actually no problem at all that we're coming down here. Fill this before heading up. Yeah, I don't think that was bearish at all. I just think it was not like immediately let's go into euphoria and have blow off top this month. I think we're still going to be having the parabola last out till later on, late summer into election season. Rune. All right. We're getting into altcoins. Let me know for altcoins. Let me just make sure Bitcoin isn't doing anything crazy. We'll check order flow real quick on Bitcoin. We're getting into these single prints. We saw this big buy wall come out of the order books. Yeah, so we'll see if these walls get filled. What I could do, so I could actually probably put Bitcoin. Let's see here. I was gonna say I could try to put Bitcoin in the corner, but that would just take too long. I have it pulled up on my second monitor here, so yeah, let me get this over here. I will let you know if we get big volatility, and I'll switch back over to it for sure. Let's go ahead and look at Rune, though. Oh yeah, music. Let me get that too. Make sure that's good audio. Let me know if the music level is too high or something. If I turn that down a little bit. Something like that. Alright. Rune. I've heard about this coin. I don't actually know what the utility is. Today I'm just looking at charts. I don't have time to go into utility of all these, so make sure you're doing your own research. Holding that weekly EMA. Chart does not look bad. It hasn't been massively underperforming or anything like that. It's very average when it comes to the chart, but you do have what looks like a head and shoulders. So, this is a bearish pattern. Do they always play out? No, definitely not. But, you do have head and shoulders with a weekly bearish divergence. So that's bearish, but higher lows, lower lows on our side, you have a weekly hidden bullish divergence. That is extremely bullish. So you have some really bullish things, you got some really bearish things on this chart. If the market's bullish, you know what's going to happen. So yeah, I think this is not a bad play. I think it's safe. You know, it's acting like more of a high cap altcoin. It doesn't look like there's high, you know, inflation on this coin or anything like that. So I think the potential is there for a price discovery, depending on what the narrative is. I don't know if it's going to have a narrative this cycle though, so it could just make like a double top or something like that, or who knows, right? Price predictions are impossible to do, but overall this chart doesn't look bad. Luca wants me to do PHT. I know he got rugged on this coin. This was something that launched on MEXC, and yeah, that's your weekly chart. That's your daily chart. This is Phantom Pepe. Bro got completely rugged on this. This is why you don't buy coins in top gainers. Yeah. This is something right here. So that's PHT. No one buy that ever. Basically a scam coin. Let's see here. Hopper 4-hour MEXC. Okay, Hopper. Or wait, Hoppy? Yeah, Hoppy, not Hopper. I like how you said MEXC. They're on the exchange if you know what exchange it's been on the longest. Nice consolidation range. So, already backtested the golden pocket once. Could we do it again? Probably. So, probably if it's bullish, if the market's bullish. And then you want to see this get flipped into support for price discovery. Yeah, chart on this actually looks pretty good. But be cautious. This could just be retracement, right? If we go, you know, with our fibs here, I mean, that's 0.5 rejection, now 382 rejection. We want to be making sure this doesn't break structure. You don't want to break this trend. But yeah, this doesn't look bad. I'm assuming it's whoops. I'm assuming this is a meme coin. As far as meme coins go, this chart is not terrible for sure. And on the 4-hour, do we have just any like divs or something you wanted to look at? Nah. Okay, yeah. Let's see, what's next? FOMC window is blocking the view. I changed that, right? I think I'm just that far back in the chats. Yeah. Okay, cool. Thanks for letting me know that. Let's see here. OTC and Grayscale Litecoin Trust. They have a trust for Litecoin? I mean, it's just Litecoin, isn't it? I mean, that's kind of bullish for Litecoin. I did not know that. How did I not know that? Why do these charts not look the same? What's going on here? I'm so confused. What is the Bitcoin or the Grayscale Litecoin Trust? Why is it up 2,000%? It's just like some leveraged trust. Definitely seems like it. Is it like a leveraged ETF or something? It's down 99.5%. This is not something I would be in personally. If it's anything like a leveraged ETF, I don't know. I mean, this looks like a... It doesn't say it's leveraged or anything like that, but... Yeah, it's an ETF, so... Could certainly be. Looks like it. Why is the market dropping? I guess, yeah, let's just look back at the charts. Alright, we're getting these walls filled. This buy wall did not get filled. That was a spoof. We can see if we... You can see all these buy walls. They got out of the order books. So those are spoofs. So, like I was saying, this is your target. You want to swing fail that. You see S&P here. Yeah, S&P is dumping down. Probably going to get a full rotation here. It's to be expected. Do not be worried about this dump. We planned for this to happen. These sweep levels were just kind of very arbitrage. I didn't really expect that stuff to hold. So yeah, it's either here, full rotation, or Big Daddy sweep level. Or we're bearish and we just nuke. Anything can happen. But yeah, we're going to be watching for a failed auction, swing failure pattern, fill these single prints. That's what I'm looking at mainly right here, these single prints on the 30-minute time frame. This is the big support level for sure. I think this wall is legitimate. I don't think he's going to remove that order. And then this is your liquidity to the upside. And we can actually look at a liquidity map. I showed this at the beginning of the stream, but these are your liquidity zones, right? So this is that sweep level, the Big Daddy sweep I was talking about, 66K. We could go grab that. There is an estimated 1, 2, probably 3 billion worth of long liquidations at that level. Go to a 3-month though, and you can see why I'm bullish. Look at our liquidity to the upside. This is like 1, 2, 3, 4, 5. We got like 5 in this bundle, and then probably another 3 up here of big levels with short liquidations to the upside. So yeah, we could grab this real quickly, but your liquidity is sitting up higher. I expect this to get grabbed. I expect all-time highs before a potential top could come in. Yeah, so why is the market dropping? It is FOMC volatility. You pump up on FOMC date, you're likely to do a full rotation down. And then probably pump back up. It's just how it goes. Can you close the YouTube Fed Reserve window? I mean, I closed this right. Yeah, I think I'm just that far back in the chat. Solana, I covered that earlier. I think it's not bad. It's going to go up with the rest of the market. And your Solana projects are going to pop off if we do break all-time highs, because we are nearing the all-time high on Solana there. Disappointed for sure. Was hoping for bullishness. Yeah, I mean, I'm not super disappointed. I mean, it's still bullish. As long as they didn't do an emergency rate cut, that's what we did not want to see. This is to be expected. When I saw the pump this morning, I was like, cool, but that's probably going to get full rotation back down to the downside because FOMC day does that kind of stuff. So, to be expected. Don't worry about this dump. This is the low we want to see hold. So we either want to see this hold or we want to see that sweep. If we start closing candles down here, that's when you need to worry, okay? You start closing anywhere in here on like big, hourly time frame, daily time frames, then unfortunately you don't have support below you. You're going to go to 55K, 56K, and then you're deviating all the other bull markets, and the top is probably already in. Got to take stuff level by level, day by day. And so far, we are holding the levels we need to hold, and I'm not too worried. Turbo. Yeah, we can check turbo. Real quickly. Mexi. Yeah, this is probably going to go all the way back down. What are you up, like 100x on this? That is a fib, not a measure tool. Okay, 150x. So, and from this low, you're up about a 17x. You're probably doing full rotation back down. Unless this is just some insane meme coin that's going to just rip up. But I don't think Turbo's anything that crazy. I don't know it, though. You got to do your own research. But if it's like most meme coins, it'll do a full rotation back down before it has another bump. Or it could hold here. I mean, we do have an order block here. So daily EMA order block. You could see consolidation higher. But yeah, this one's sketchy. Highly informative. Thank you, Fluffy. Appreciate you. Can you look at Soul, please? Fine, I'll look at Soul. I'm just kidding. Yeah, we can definitely look at Soul. I wonder if you flipped this golden pocket into support. Not quite. So yeah, we want to see this get reclaimed. That would be ultra bullish. As of now, it's 786 rejection, golden pocket rejection. It's could just be a retrace, but the trend is your friend to the end of the trend. The trend has been up, higher lows. Local golden pocket back test. Volume levels. Back above this? No. Rejected value, are you high? Finding support near the point of control. Let's do macro. You already back tested this for Wyckoff. That should not be tested again. Let's go previous top end range. So this is what you want to hold. Sweep this, that's okay. But you don't want to, these should not break. You don't want lower lows than that. So yeah, Solana. Trend is your friend to the end of the trend. As long as it's got higher lows, don't really have reason to be super bearish on this. But depends what Bitcoin does, right? Everything's going to follow Bitcoin. Why are you skipping over Aerodrome? I'm not skipping over anything. I just didn't see it. So yeah. Sorry if I'm missing your coins. Let's see here. Aerodrome, did I get that right? Yeah. It's on Coinbase and CoinEx KuCoin. Interesting. That. So it's a 2024 launch. If it's got VCs or supply dilution, this is going to rotate back down. You've already tested the golden pocket twice and it couldn't hold, but you are getting into supportive levels here. I bet you there's going to be some sort of volume there. If we take out that. It's actually down here. And is that, let's just go on like a mathematical basis with their fibs here. Oh, that's what I just did. I'm retarded. Okay, yeah, I mean, this level here. That's where your volume is, so. I mean, either it sweeps this, or it's probably deviation. Just on a charting basis, I don't know. Again, don't know the utility of any of these. Is there a chance Bitcoin will bounce back today, in your opinion? Oh yeah. Oh yeah. I mean, we don't have much time to that daily close, but FOMC day gets a little wild. It could easily send on up and retrace this entire dump in like a 10-minute candle or something. But yeah, let's look at Bitcoin. We're getting the dump. Should have been covering this when we actually got the dump. But yeah, you can see FOMC volatility is here for sure. All right, we were expecting the full rotation. We got the full rotation. This wall right here, did they take it out or was it legitimate? Whoops. It looks like they took it out because actually no, I think they did keep that in. Yeah. No, that filled. You can see the sellers into it. So we'll see if we can sweep back above that wall, hold the TPO point of control like we are right now. Let's see. I mean, this is the sweep, right? Don't really like how this wick is very close. That could be another grab. Usually whenever you do sweep down, you get a secondary sweep, right? So if we go like this, probably going to do something like that. But yeah, we got the full rotation for sure. Nothing too much to talk about on the footprint. Open interest though, you do see longs are finally getting squeezed here on Binance. Longs getting wrecked on Bybit. If we look at our aggregates, and let's see here. I hate the draw tool in this program. It's so bad. Let me just delete all of these. But you do see you see that open interest tanking. Okay, I'm not gonna mess with this right now. Look at this open interest on aggregates. Absolutely sending down. You're getting long squeezed. This is why you don't open longs on FOMC. You're gonna get grabbed. And then yeah, you see these big buyers at the sweep level. So yeah, it could be Big Daddy sweep at 66K. That's where that liquidity is. That would make a whole lot of sense to go ahead and grab that level. I think it looks better on like a monthly time frame is where it shows it. Yeah. See from these lows back here, that's your sweep level. So that's actually bullish if we go down there and grab that and can swing fail it. As long as we don't close below this. If we close below this, it's game over, but swing fail is bullish. We didn't sweep the highs yet, so that's good. good to see. We didn't grab the single prints. They're leaving these for a reason, right? If you don't grab these, it's bullish. They're leaving that up there to grab later. It's like a sign that, hey, we're just coming down to grab longs before heading back up. Rune Bitcoin, we can look at it. I'm probably going to be ending the stream here soon, just FYI. So if you have any last questions, ask me them. If you just spam me with a bunch of altcoins, I will not be able to get to it. So try to just ask questions about like trading or market stuff. I'll make sure to get to any of your questions. Okay, yeah, Rune USDT, and then we'll add. What am I doing? Over Bitcoin. Let me see. What was this chart again? That, okay. Yeah. I don't know. It looks like it's getting to support on Bitcoin. That's kind of what the whole altcoin market is doing. You had an initial pump up in, oh, this actually happened in the summer, but yeah, like October to January is when you had that big pump on the altcoin market. And then you have devalued against Bitcoin this entire time, coming down to previous lows. This looks like other altcoins. So if Bitcoin dominance is to come down, like I hope it will, you will probably see this thing value against Bitcoin once again, like it did back in, 2023. XRD. Forming nice support there. I would not say so. Sorry to burst your bubble, but that is not support. You've tested it too many times, and you're starting to close down there now. So this is probably going to break down unless we have big volume support. Yeah, we've lost the support. See, if you were holding this, if you're holding this level right here, I would agree with you. That's good support. But you have broken this. Not only have you broken it, but you have wicked up and back tested it on an hourly time frame. So you've gone ahead and back tested this value area low of your entire range. That does not look good. This goes all the way back to 2022. It has massively underperformed. I would not buy this as a trade. Just FYI. I could be wrong. It could deviate, right? Could just be a deviation back up into the range and go crazy, but I don't like this chart, personally. Please look at Bitcoin. I'm sure this is from earlier. I'm like far back in the chat. Oh, let's see here. Bearish backtest on the S&P or recovery. Let's look at that. So the dollar is looking like it wants to roll over. You're forming new value areas within this range. Do I have the monthly even turned on this? I don't know why it's not showing. Anyway. It's hard to say. Very hard to say. It's really a bearish backtest until it can reclaim the point of control. Or this value area low. We got to see it reclaim, and then you're out of the woods. Right now, I don't know. Probably a bearish backtest. I still expect some of this to get filled. This is just a features gap in here, so likely to fill some of this. Where would you open a long position? So the level I have identified is this sweep right here. It's around 66K. If we were to sweep this and get back above on like 30-minute candle close with a failed auction, I might even limit in on the failed auction if it's very clean, then I would take it. So I've identified the level here, and I would need to identify the edge when we get down there, because if it does not swing fail, if there is no failed auction, finished auction, if there is no bullish divergence, because likely what's to happen is you come down here first and then make a bullish divergence, right? RSI goes up. Or CVD, you know, it could be a CVD divergence, and any type of bullish divergence into that level. If I don't have those three confluences, I'm not going to be taking the trade. So you got to have those confluences, but yes, this is the level I've identified as a possible long. If you saw those confluences at these levels too, I mean, that could also be valid. Any of these sweep levels are technically valid to have that confluence, but I'm really only focused on the 66K one. I'm not really too interested in longs. I have so much in spot right now that I'd really just be taking it to learn and build fractal recognition, and just to just keep trading, because it's always good to keep trading, or else you'll lose the skill. I'm not going to put a lot of money on that. Bitcoin to 66K, alts are done. Everything's done if you go to 66K. Oh wait, no, I was thinking 56K. Bitcoin to 66K equals alts are done. I mean, I think the wick on altcoins could still hold. If we look at, again, we'll look at Bitcoin dominance. Bitcoin dominance is falling here, so altcoins are actually holding up better. So this wick could hold on the altcoin market and Bitcoin still sweep. So Bitcoin could sweep and we could have a higher low on altcoin market, creating that divergence and signaling the altcoin season. If this is not to hold though, yeah, it's a little sketch. We're at make or break moments. We just want to see levels get held, and as long as they do, we could have very euphoric times ahead of us, and I'm not worried until they do. This is to be expected. $54, $56K is a good level to set buys for altcoins. If we keep going down, if the market is to do what my base case is, and we have an altcoin season here soon, I think any of these levels are good to buy it. And you're getting near the lows on a lot of your coins to have a good invalidation and to cut your position if it is to roll. So yeah, I mean, I think for sure altcoins are a good buy as long as you're buying on spot. I don't leverage trade altcoins. I think that's kind of foolish to do. Some altcoins are decent for leverage trading, they're higher market cap, but I stick to Bitcoin as far as that goes. Spot altcoin buys, I think we're at a good area already, as long as the markets continue up. Do you have a video dedicated to the programs? Yes, I have an entire playlist, so I will show you this right now. Let me just show you on stream, because why not? If you go over here to my channel, and you go to my playlist, okay, it's going to show a bunch of other playlists for me because it's my channel, but Bitcoin trading series, you'll see this. I have two playlists, the altcoin playlist and then this. This is what you want to focus on, Bitcoin trading series. This starts off with, these are like some of my first videos, so you'll notice my mic quality is pretty bad. They're much slower paced, but this goes through like everything you need to know to become a trader. And then towards the bottom here, I have my strategies. So this video and this video are really covering my strategy that I use to trade. And then here are the top 10 rules you need to know when you are trading. So watch these 3 at the bottom. Definitely watch these, and then if you got time, this whole playlist is good. And like I was saying earlier, I have the links to all of the programs I use in the Discord here. So join my Discord, trading resources, all of the software is right here. All right, we're going to finish up answering questions in the chat, and then I will be signing off here for the day. So any last questions, let me know. How do you identify a failed auction? So that video I was just talking about, the setup video, like this one right here, this is all about failed auctions. That is a failed auction, where you have like at the top of a wick, you have 0 buyers, or you have 0 sellers versus like a bunch of buyers, and price is not able to keep going up. That is a failed auction at the top of a wick, and you identify that using a professional trading software such as Trading Light or Exocharts. And you can see within the candles here. So like at the top, we don't really have anything good, but if we go down to the lows, you do see very clear failed auction. 115 Bitcoin being shorted, 0 Bitcoin being bought into the bottom of this wick, and price is not able to accept lower, inherently meaning this is a failed auction. Someone absorbed that seller. Trading Light more than Exocharts. I personally do. Yeah, I like the UI a lot better. It's just better to like work with, in my opinion. I like the indicators they have, and just the whole UI really is just really nice. But I will say Exocharts has, they also have the footprint, or the liquidity map, which is amazing. You can actually see the orders in the order books here. But I will say Exocharts has more in-depth bar statistics. Like down here at the lows, you can see I have delta volume, total volume, short liquidations, long liquidations. Exocharts has more of like options for this. Not that I really need it, so I don't really care about that. But they also have volume-based candles and aggregated footprint charts. So yeah, there are definitely some aspects of both that are better. And I will probably be getting Exocharts here soon, just so I can get that aggregated footprint as well as volume-based candles, because I've heard volume-based candles are more reliable when looking at divergences. So I'd say if you got the money, try out both, or just watch YouTube videos on both. Research them yourself. But I go with Trading Light because, for one, it's cheaper. It's like half the price as Exocharts. And I like the UI a lot better. Oh yeah, I'll give an overview of Bitcoin before I go. Central Exchange, meme coin suggestion, quick 2x. I have no suggestion for a quick 2x. Yeah, I got some videos on my channel of some like meme coins that I do like, but they've already, what's funny is that every video on I did like a ranking video on meme coins, and 1 week after that video, every single coin I covered was up at least 100%. And they're still up a lot, so, the meme coins might not be the best to buy right now. I would actually prefer to buy altcoins that are at their lows, but I don't know, do your own research. I don't have anything off the top of my head that would be a good meme coin to buy right now. Outside of that ranking video, those are my favorite ones. If you want to go check that out, it's in my playlist. Just go to my channel and go to playlist. You'll see the altcoin ranking videos. All right, so yeah, let me go over Bitcoin real quick. Like we were talking about, we got these sweep levels to the downside, 67.2, 66.9. I would not be leverage trading any of this. The FOMC meeting was not bullish or bearish. It's about what we expected, just really not saying much. What's nice is they did not signal that the top is going to be in July, because they're going to wait to cut until September or even November. So we could have the rally all the way up until election season. I expect Bitcoin to break all-time highs here soon, because the liquidity is still up higher. We have all of our sweep levels up higher. And if this does become a low and we do bounce off here, again, don't FOMO into longs, because normally we do have a sweep of a sweep with a bullish divergence coming in here. So I'd be watching for something like that. I am really just looking to kind of hold my positions, not really do much, just kind of watch price action and make sure we're not breaking levels that we cannot be breaking, such as 65K on closes. As long as we can hold that on closes, I think we're set up for the most violent part of the rally ahead of us for at least the altcoin market. Bitcoin might just go into upthrust after distribution. If you know Wyckoff patterns, look that up. UTAD is something we could have for Bitcoin, but during that time, altcoin season should go ballistic. And I'm fairly bullish on what we got today. The cold CPI was amazing to see. That's a big number that I think people are going to overlook. So yeah, this is where I'm going to be ending the stream. Make sure to smash the like button to boost the algorithm, and then I will be uploading a video later today. I'm going to be filming one in like 30 minutes, so be on the lookout for my video that I will post later today, just kind of covering everything we talked about on the stream here. So be on the lookout for that. But yeah, and also make sure to go join the Discord. Link is in the description down below. If you have any more questions, any altcoins or something like that that I did not get to on the stream, make sure to join that Discord. Links in the description down below. And with that being said, thank you all so much for watching, and I'll see you all in the next stream or video.